Welcome back to Out of the Rough. I'm Fred Arnold, and I'm joined by Fred Kreger. Fred Kreger is a mortgage professional with American Family Funding, and we're going to talk all about reverse mortgages, what you need to know about reverse mortgages. Welcome to the show.
Thanks, Fred.
We're going to talk, first, a brief history of reverse mortgages.
So really quickly, a reverse mortgage came out in 1961. It evolved into what the current reverse mortgage is, which is as of 1989. And the reason why it had evolved, like all other financial products out there, unfortunately, there was some abuses that went on. So currently, right now, the current reverse mortgage is actually completely, I won't say senior proof, but literally makes sure that there is no predatory lending, ensures that the senior, whoever gets a reverse mortgage, is well informed of what's going on.
And it helps protect those trying to get that particular product. Let's talk about the differences between a reverse mortgage and a conventional mortgage, a reverse mortgage being the product that we're highlighting today.
Sure. Well, in a conventional first mortgage today is you make a regular mortgage payment to reduce your principal balance, say over a 30-year period of time. The flip side of what a reverse mortgage is that instead of you making the payment to reduce your mortgage payment or your principal balance, you are actually now receiving a benefit or receiving that payment directly to you. And there's a number of ways that you can actually receive what I call a benefit. And that's really, it's either a monthly benefit, a monthly income, if you will. It can be a lump sum. You could receive like X amount of dollars. You could also receive it in some sort of equity line of credit. So those who are familiar with a home equity line of credit, it's very similar. When you need it, you borrow it. Now the greatest part about that aspect is everything is completely tax-free because you're actually reducing your equity in that property to actually pay you as the senior as opposed to you actually making a mortgage payment.
So you're taking a loan, so it's not tax deductible because it's a loan.
Correct.
And there's no payment required, or normal payment required. You can make a payment, but those normal 30-year payments you no longer have. So very interesting. Let's talk about the requirements, because a lot of people, how do I qualify? What age and what are some of the requirements of a reverse mortgage?
Sure. Basically, you have to be 62 years of age or older. So if you actually have a spouse, their ages must be 62 years old as well. You must have equity built up in the property. In other words, that you cannot have a maxed out mortgage. The greatest part about the requirements, people say, well, I don't make enough income, I have bad credit, I had a bankruptcy. That has absolutely nothing to do with a reverse mortgage because you're not qualifying to make a payment. All you're qualifying for is what your age is and that you actually have equity in the property and it is your primary residence.
So let me just stop you there. So if you've had some challenges or you got taken advantage of as a senior on a reverse mortgage or on a forward mortgage, let's say an interest-only mortgage or a 5-year fixed or a pay option loan, you got a subprime loan, this is a way to get out of that product and not make any more payments.
Absolutely. And one of the great parts about the requirements, and we call it a requirement, is there's actually mandatory HUD counseling. You cannot get this loan unless you actually go through an in-person or on the phone counseling with someone to really understand that you truly do understand what the program you're getting into, and quite honestly is that you have the capacity to actually get into this loan as well. And that's very important.
Now, one of the things that we all know is you have to qualify for a forward mortgage, a regular mortgage, conventional mortgage with income. Do you need income to qualify
Absolutely.
for this product?
You do not need any income. There's no credit requirements, no income requirements whatsoever.
Yeah, so it's easier for the senior to get involved or get a reverse mortgage. There's things in place to protect the seniors, and I'm very familiar with it, having a lot of customers that have to qualify and get that counseling. Let's talk about the benefits.
Sure.
Benefits.
One of the great parts, and this is, again, coming from a Q&A session that I hear a lot of times with a lot of people that I talk over the phone with, is, well, I'm concerned that I'm going to lose equity in the property. I don't own the property anymore. I said that's absolutely not true. You maintain ownership. If the home is in a trust, the trust remains intact. You're concerned about, well, say I outuse my benefit. Let's just say that, and all the payments are based on what's called actuarial tables. So let's say you completely run out of the benefit at the end of the mortgage. Is my estate left with a tax lien? Are they left with any other type of lien? Absolutely not whatsoever.
So let me step back. So if you were to borrow $300,000 on your reverse mortgage, and for some reason values continue to go down, or or you live to be 105 and they didn't anticipate that, and you owe more than what the house is worth, your estate's not going to be, they're not going to go after your estate for those dollars that of extra benefit.
Correct. The estate is not taxed. The estate does not have that as a lien against the estate whatsoever. The insurance, the reverse mortgage actually has built-in mortgage insurance to actually protect against that.
It protects against that, great. But check with your financial planner just in case there's a tax consequence of taking the equity out or that situation.
Correct. Now, one of the other aspects I wanted to add, Fred, too, is that this is not just for what's called refinance or cash out refinances, where seniors can actually use this as to purchase their property. So for instance, let's just say you're a move down buyer. Let's just say that person is an empty nester, they want to get into another property, step down, and they have so much equity built up into the property, they can actually transfer that money into the new property and actually use that to pay it down and give them a monthly stipend or a lump sum, et cetera. So they can actually use that to purchase their new home.
To purchase their new home, have it in place just in case.
Correct.
Now you have to be living in the house, correct?
It must be your primary residence, yes.
And you have to be occupying the house.
Correct.
It has to be your home. So once the last remaining spouse, a surviving spouse, moves out of the house permanently because they move into, let's say, a nursing care facility, at that point, the estate has to sell the house, correct?
Correct. They have 6 months to sell the property. I guess gives them enough time. And again, going back to if they owe more than the property is worth, the estate just walks away.
Now, to touch upon another point when it comes to that, if there's equity left over, the kids get it, or the estate gets it, correct?
Gets it, correct.
Yeah, there's a lot of question on that. Well, what if there's $300,000 in equity left? Yeah, the estate gets that.
Just like as if there was a forward mortgage.
Yep, and there's interest rate charged on that money, so that's how the bank or the financial institution is able to benefit there.
Correct.
So that's why very good, very good. Now you can use the money. What can you use the money for?
You can use money for anything. So a lot of times when we do the counseling, it's like, well, I receive a fixed income, which is great, but I have emergencies every once in a while. I need the car fixed, need the roof fixed, need these things, like great. An equity line of credit may suit their needs for those types of emergencies.
Yeah, that's huge. We got one for a lady who wasn't using her shower because something was wrong with the electricity, and every time she took a shower and turned on the light, she got shocked. Who needs to live under those conditions?
Right.
We were able to get her an equity line of credit, so she's able to use for those items. So we just got 1 minute, but some other reverse mortgage benefits. You can use it for medical bills.
Right, you can use it for anything. Even right now, in terms of senior care or in-home health care, so a lot of people don't want to go outside and get their home care. So instead, they can actually pay someone to come inside to take care of them, and that'll actually help supplement those particular types of bills, which is great. They live in their primary residence and they feel comfortable.
Yeah, that's important because retirees want to live their life out dignified. And usually when I meet with the children, we all meet together, the children and the person getting a loan, the senior getting a loan. And I find that a lot of times they just want a great life for their parents, And I find that they're usually on board and they want their parents to, don't worry about us. Use the equity in your house to live a quality life.
Right, and again, it's all about that. It is about the quality of life, which actually this program does help them and actually has those stop gaps, mandatory counseling, et cetera, to ensure that they're not abused.
Perfect. Fred, how do the listeners or those watching can get a hold of you?
Best way to get a hold of me is phone number 661-505-4311, or again, our website is www.affloans.com.
www.affloans.com. Fred Kreger, mortgage professional with American Family Funding, all about reverse mortgages. We're going to jump to a quick break, but when we come back, we've got Patrice Rifkind, CEO of Audiology Associates, and we're going to talk about challenges business owners and others face when it comes to their hearing.